All right, ladies and gentlemen, I hope you had a wonderful day. It was a very rough start to the beginning of the quarter, and even though there was data and a couple of things going on in the morning and throughout the day, it was very hard to ignore the bond yields getting murdered. So even before anything came out, it was already rough for the bond yields. I thought we should talk about it because now bond yields are at an interesting point to begin the year. We have more data, and the reaction we got to the data today, it could be a clue for the rest of the week. So Chad, we got a lot to talk about. I got a little bit of a recap on what happened today, what we're looking at tomorrow, the rest of the week, and then I got a bunch of plays for you and everything else we're going to be looking at. So Chad, what I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. Run it, baby.
Working to the couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, like I said, it was a very rough start today, but how it played out was a little bit deceptive. Everybody was blaming it on the data. We had construction spending come in the opposite way. The manufacturing PMIs, all it showed was higher prices, and prices being passed on to consumers did not show anything good about employment. It was really strong data, and you finally had a negative reaction, and everybody was saying that's why we had this reaction today, because if you take notice here, the market did start dropping right after we got the data around 10, but then if you go to the bonds also dropped, but take a look here on this multi-day chart, the bonds gap down ahead of it, and even like 5 minutes ahead of the data, they also had a bigger sell-off here. So this is what I was talking about today, where it's like it was very hard to ignore all this, because if you don't know what this TLT chart is showing you, this is now the highest point for long-term bond yields of the year. Even if you go to the 2-year bond now, and even the Fed futures, rate cut odds pulled back today, the 2-year bond even went back up to 4.711. You had hot data, and the bonds really did go the other way. So this is what caught a lot of people's attention, but the main thing when it was all said and done was that the bond yields did react to the data, but they also pulled towards these levels well in advance. So this is a really big deal now, because bond yields, and like we were talking about, if we aren't going to be getting an answer here from everything going on with Powell and the rates and all of that, maybe we got to see where rates are going to settle. Are they going to be closer to 4.5 on a 10-year, or are they going to be closer to 4? So this is what we had today. It was pretty much the data. China did good overnight with their PMI, so we got a boost from that. You had a couple of headlines here and there, as like FedEx and UPS and USPS deals that they were doing, but generally things were pretty good. But now the real other factor that was at play here, because was it the bonds? Why did we also sell off here? What was the real reason? You also had Europe close. So yes, today in the bond yields going towards yearly highs, this is a real big deal, but it doesn't seem like there was any news. It was half of the data. Where did the other half come from? People are blaming that on Europe being closed and the lack of liquidity ending up impacting the bonds and obviously starting off the quarter. So like I'm saying here, I think it was just a little bit of a breather coming off last week, a couple of these factors, and now I think we are still going to be riding until we get the data. And now this is what leads me into the next key, because, yeah, we did get a reaction on bond and equities. They did react prior, but with what we saw today on the data, the good news is you actually responded to the data. Data came in hot. Market had a knee-jerk reaction the other way. We'll see if this happens tomorrow with the jolts. Even on the ISM on Wednesday, there's going to be a services function there that could really move the market, but this is the good part, because we finally actually move. So like I'm saying, yeah, we'll watch the path this week has a lot. Well, if we get moves like this all week, the data really will have the ability to move us. Otherwise, I do still think this is going to be a lead up into next week's CPI. I think more action than what we had last week, and then no matter what happens here towards the end of the week, everybody is going to start punting towards this CPI and data. So all in all, I think a little bit of a slow start and getting us eased here into the quarter, but now the final thing you got to watch for on the week, this bond move is big. You cannot ignore it. Like I'm saying, yields are at the high. Whether you're blaming liquidity, whether you're blaming the data, we're going to see what's coming out now. If the markets get sensitive and we're back in this range, even though we're near the highs, everybody is kind of looking for something to respond to, and this is something I've noticed already in the last 24 hours. A lot of people are hyping up all of the Fed speakers this week because it is quite the schedule, and even though Powell on Friday, yes, you had Powell on Friday, even though the market was closed, it didn't move much. People are trying to wait and see because there was a couple of comments last week from like Waller and even Bostic where they kind of pushed back, and maybe that's the explanation for yields at the high. So the final thing you got to watch out for, Fed speakers this week is going to be key. Tomorrow you have Bowman, Williams, Mester, and Daly. Then the next day, Wednesday, you get Powell, Barr, and Kugler. Barkin, Goolsby, Mester, Musalim, and Kugler on Thursday. And then on Friday, you're getting Barkin, Logan, and Bowman. It auto-corrected to Barking. Yeah, I've noticed. I just noticed that. But all in all, our work is cut out, and even though we started off slow, there was some liquidity things at hand, but we got a big week of data. So, Chad, I hope you're ready, but now let us get into the plays. So, right off the bat, I got a couple of different plays, and I got to start with this. I averaged down on it the other day, and it went up, and I averaged on it right around December as well, and maybe one quarter later, this is where we get it, but BIDU and BABA. And even today, there was strong China data. The PMI numbers got people feeling good about a Chinese recovery, which has not materialized. So hopefully this holds up, because the last time, literally about like a month ago, 2 months ago, they had data like this. It got all these stocks moving, and then it was followed up by pretty soft data, and then it faded away really quick. So we'll see, but maybe now if the data comes in back-to-back good with all of these China stuff this week and next week, keep your eyes out for that Beijing bounce, and maybe we get it this quarter. Maybe. We didn't hear much, but, little rumors in January, not as much as last year. So maybe, but either way, I'm still in this. I have not added any plays besides those BIDUs. I have a ton of shares, BABA, in the long term, but going to be riding that out. I break even at like 109, I believe. No, 113. We're close to 109. 109 was one of my other purchases, but 113, I break even on like 750 shares. So got a big position. I have been riding on this one for a while, so going to be watching out for that. Again, keep your eyes on the headlines, as there was even effect today. And then play number 2. This is one we have a play on, and I decided to make a protective put on it. And I wanted to put this up here because, one, uranium has been taking off lately. The last couple of weeks, even the last couple of years, uranium has been up. Everybody has been talking about this with all of the energy stuff. It gets more attention depending on what's going on or not, but it's been very active, and this play popped up. We made share plays on this not too long ago. A couple weeks ago, I bought 1,000 shares at around 42.75, and well, today the thing popped up in uranium. If it wakes up with energy and oil, that would be nice. And even though I had a nice gain on this, I had 1,000 shares. I think after today, I ended up going up like $4,000. What I decided to do was go for protective puts. So I want to explain this because some people are like, why are you buying puts? Are you bearish on uranium? And I said, no, I actually want to ride this play out. I've been waiting for this thing to break out. We bought it. Remember, there was like government funding and bills passing on uranium. Not to mention, it's just been holding up here. This is like getting to one of those breakout levels. So I was like, hey, I want to get in this play. It had a little bit of risk. It kind of reminds me of like UNG before UNG got totally clapped, but I'm saying it's really risky. I went big. So now that the play is up, what I decided to do today, I grabbed April 19th puts to allow me to hold it here as it's at one of these breakout points. And what I did as it was going up, I started with the 41 puts. I bought 10 of these for 24 cents, spent about $250 $40. My position's at $42.70, so this doesn't really protect me, but I figured, hey, the other plays near my strike price are a little bit expensive. I'll wait if they end up going up, and sure enough, throughout the day, after I bought these started going down in value. The 43s came down to like 43 cents, so I said, let me buy 10 of these. So now I have 10 of the 41 puts on CCJ, and then I have 10 of the 43s, but then I also own 1,000 shares at $42.70. So now by owning 10 puts at 43, I could hold this effectively for the next 19 days, and even if the stock goes down, if it goes back to where I paid for it, I will be up on these plays. So now I cannot lose no matter what, really. If it does like meander within like 30 or 42.70 plus, I think add like 60 cents, it adds to my cost basis. Then if it kind of just doesn't move, then I will get clapped, but gives me a little wiggle room. Made good gains on it today. It'll allow me to hold it. If I could hold this even by the end of the week, I'm still down to sell out. Remember, I did this with card on that position, and it allowed me a little bit of wiggle room to hold just in case it does keep going. And like I'm saying, uranium and CCJ, it is definitely at a breakout level, so watch out for that. That is play number 2. And then play number 3, I just got out of this one last week, bro. Weed, MSOS, bro. It went crazy after hours. It was even going nuts today, but the news was that weed will be on the ballot in Florida. So more good election news. It's starting to heat up, but dude, even though I'm already out, man, MSOS is at a breakout level. These high 10s gets kind of nuts. Maybe I'll want to double dip, but for now, let's wait till you get one of those pullbacks leading into the election, if we get one of those random sell-offs. But GG, if you kept holding this news, you may see some activity tomorrow. So if there is any cheap weed plays, post them in the comments. Maybe we'll take a look. But that is play number 3. And finally, I got one more, man. I have 4 for you. I know. I can't hold back. I got one more, man. Last one, JP Morgan. I have a problem. I got to keep my eyes on the pre-earnings. And last time I looked at pre-earnings on JP Morgan, I got smacked because it moved up a lot. Premiums were high, and then it just like dropped the first day or two before earnings, and then the earnings wasn't that good. So be careful. But what I'm trying to tell you, earnings are right around the corner. So don't forget about that. We're going to have to go through a little bit of the data this week, more data next week, but really soon bank earnings will be beginning, and we are going to be getting reasons to go higher or go lower, especially if the data story is all going to be the same. So Chad, those are the main plays. As far as everything else, I've sold out of my Oxy shares. I held those for like a year and a quarter. I've literally collected like almost $200 in dividends. I was like $150. So I got like $30 on the share, took the dividends. Every time that play would go green, it would come down. So I said, let me get out of it. And then I was trying to get out of the Nuve, but remember that deal that we talked about? Unfortunately, worst case scenario happened. Nuve, they had the rumor. I talked about it with you guys. We found options. They went up like 200, 300%. And then today the news was they got an all cash offer to get bought out for $35 a share. Stock was trading at like 34 and some change, but our options are at $35. So now they're effectively worthless. So that is the risk with the bio plays. If you buy higher than where it gets bought out, and that's what happened with Nuve. But other than that, still in plays. My bond play, bro, I was up so much on the bonds. I was up like $1,900, and then I'm down now like another $1,500 off of just one move there. 2-year plays flips. So still holding them again. I actually kind of like them even more. I think there's more of a gap. But other than that, riding out some of those China plays, some of the stuff we're in from last week, those CCJ, Marvel did not add to that, but keep an eye out. We got a little bit of time until the AI event, and then taking it in. And now we got a movement from data today. We'll see what it gives us tomorrow. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, you can never wait for things to be perfect to make a move. Things will never be perfect. That's why you live on earth and not in heaven. So learn how to make a move in every environment, Chadadonia. And shout out to the long term. And I'm not just talking making moves in finances. Oh, yeah. I hope they feel me, Chad, but I love you. God bless you. Drink that water. Stay hydrated and healthy. I'll see you in the morning. And horn.